Ladies and gentlemen, welcome back to the channel. Here in this video, we are going to be going over all of your market news you need to know for this Sunday afternoon. Specifically, Trump's tariffs were shot down in federal court. Trump is obviously appealing this, but you could go from a situation where 69% of products coming into America are subject to tariffs or to be tariffed, down to about 16% if this court ruling holds. Now, I'll give you the dates when the final ruling could be, and in my view, how this could affect the markets. This could be big news starting off this week. Now, keep in mind, stocks are not trading coming tomorrow, so unfortunately, I mean, if you're a nerd like me, it's a short week and you don't like short weeks, but it could be impactful coming on Tuesday. We will discuss this. As well as that, I want to generally speak on markets, the seasonal weakness that you should expect in September. Ladies and gentlemen, we have a lot to get into here in today's episode. Hit that like button and subscribe to the channel if you haven't not done so already. If you want to join a personalized trading community, come talk with us, talk to other like-minded investors. Check out the link down below in the description of this video for the trading community. I have the portfolio up on screen. It's up 80.57%. We are outperforming 98 to 99% of hedge funds and institutions this year. And let me put this into context. The S&P averages a 10% return. We are outperforming the S&P by over 8x this year and the historical performance. I think this portfolio could be up 200% year to date by the end of this year. Easily, in my view. What we're doing over there, the main strategy, beyond just shorter term trade opportunities, of course we do that like everyone else. I like to snipe opportunities. I'm not into over trading much. But we go out and find small cap AI stocks with incredible value that Wall Street is not seeing. Again, as I've mentioned before on this channel, I bought IONQ at $7. It ran into the 50s. Amazon is buying that company now. I bought Novartis at $2. That stock $6 today. It went up to like $9 at one point. I bought Nebius at $22. Really went all in on that stock at like $22. I made videos on it on this channel. This past week, it hit $71 per share. Applied Digital, I bought that at $3. Today, it's like 16. Went as high as 17, 18. Okay. This is all within the last 6 to 12 months. I have spotted and identified multiple new opportunities that are similar, honestly, better than a lot of those other stocks, really all of those other stocks that we've done this strategy on in the past 6 to 12 months that I just mentioned. Now, it's not a guarantee. Obviously, you could lose money. I'm not a financial advisor. I am documenting my journey. And yes, this is a very risk-on strategy. But the way that I operate this group and my thinking behind this is if you invest in high quality, cream of the crop companies, in cream of the crop kind of business models, okay, AI, for an example, that are growing at hundreds of percents with what I view as multi-years of hyper growth that are trading at a fraction of the well-known AI stocks, unless there is a cataclysmic collapse of AI valuations, I think these stocks are less risky than some of the well-known names. So I think you can still get those 10, 20, 30x opportunities without taking on 10, 20, 30x opportunity like risk. Normally, to get those kind of returns, you have to take on a lot of risk. Okay? Super sketchy companies. But this strategy, I think, is, again, cream of the crop, just to use that terminology again, right now in markets. Check it out, link down below in the description of this video if you would like to, again, come conversate, come get a part in the trading group. But with that said, ladies and gentlemen, let's get into today's episode. Okay, now in big news today, actually making the main news article on CNBC, it says Trump's tariffs that are voided by and ones that are safe from Friday's appeals court ruling. Trump has said he will appeal the ruling to the U.S. Supreme Court. Now, Trump's sector-specific tariffs, including on copper and steel, remain safe from the ruling, potentially foreshadowing a new trade playbook Trump could use if his reciprocal tariffs are blocked. Okay. So it says before court action, Trump's tariffs were set to affect roughly 69% of U.S. goods imports, according to the Tax Foundation. If struck down, the duties would impact just roughly 16%. So yeah, that would be much different. Okay. It says for now, the appeals court ruling states the duties on goods from most countries, as high as 50% for a few countries, will stay in effect until October 14th. To allow the Trump administration time to appeal the decision to the U.S. Supreme Court. So basically, nothing has changed as of now. But logically speaking, it could make sense that the odds that reciprocal tariffs are struck down in the courts, goes up. Okay, so basically, we may not get these super high tariffs everyone was expecting. Now, honestly, there's good and bad to that, okay? Because the big, beautiful bill has large deficits, and the way that Trump was trying to offset that is by tariffs, okay? But not having as high of tariffs means you're not going to have an inflation problem. You're going to have stronger growth, economically speaking, I'm sure. Let's be honest. Onshoring is not going away anytime soon. There is this black cloud, if you will, or gray cloud over businesses that says, like, hey, things could change at any time. Would you rather go out and invest in a new manufacturing plant in India right now or the US? Like, the smart business would say, yeah, we'll be safe about this. We'll invest in the U.S. because we don't know what could change in the future, right? There is this onshoring effort, no matter if tariffs go away or not. So I know what a lot of people are going to say, like not having tariffs could be bad for the U.S. from a growth perspective. I don't buy that because I think intuitively, strong business leaders want to onshore. It takes the risk away from what could happen in the future from a political standpoint. And again, even if Trump's not the next president, could be somebody else that Trump is close with, okay? So I don't think that's going away, but you're not going to have the same style of inflation concerns that you have today, and you're going to have more rate cuts with no tariffs or substantially lower tariffs. There could be, again, a lot of positives to that, but there could be a one big negative where that deficit's just going to look worse because you're not going to have tariffs to offset that. So let me know down below in the comment section whether you think it would be good or bad if Trump's tariffs were shot down in the courts. Now, Trump cited the 1977 International Emergency Economic Powers Act to justify his sweeping tariffs. He declared the United States trade deficit with other nations a national emergency and invoked IEEPA to impose the steep levies. The appeals court ruled, however, the IEEPA does not give him authority to implement the tariffs, stating that power resides solely with Congress. Quote, the core congressional power to impose taxes, such as tariffs, if vested exclusively in the legislative branch by the Constitution, the court said in its 7-4 ruling. So basically the court say, like, major industries that are important, like, can be tariffed, right? Steel, aluminum, maybe even pharmaceuticals, right? Maybe semiconductors, certain, things, sectors. But like, does furniture really matter? Like, is that a national emergency? Basically what the court is saying. No. Like, tariffing furniture or clothes from China. These things that really have no national emergency implications are not covered by IEEPA. So that's kind of the general gist here. Again, they're going to stay into effect up until October 14th. That runs through September. That's like the next 7 weeks or so. But again, we could see by October tariffs either just not happening largely, or that need to go through Congress. Okay. Now, could some of the tariffs get passed through Congress? Probably. Again, it's a red sweep, so that could definitely happen. But it would be less if this ruling holds by the courts. Now, Trump has said that he will appeal the ruling to the Supreme Court, but he says, quote, if allowed to stand, this decision would literally destroy the United States of America, he wrote on social media. Okay, Trump can be a little dramatic here. It would not destroy the United States of America. Not at all. I think stocks would probably do quite well when it comes down to it. And maybe Trump is a little bit more okay with tariffs not being as sweeping as they have been, okay? If the markets rip higher, maybe Trump's okay with not as many tariffs. Personally, I think Trump wants the record of the strongest stock market during a presidency, okay? Just my opinion, but I think the stock market is going to heavily correlate to his decisions. Like, for an example, I think Trump was prepared to fire Powell when that news came out, but then the stock market started to tank, and he said, oh yeah, I had no plans of firing Powell. He did. He was going to try to fire Powell, but stock market selling off. He didn't want to risk a major crisis or crash. Now, what happened on Friday was the de minimis exemption was officially eliminated on Friday. So imports valued at $800 or less are now subject to tariffs and duties. Another blow to small and medium-sized businesses. Now, here's the deal. Stocks reacted very negative to that news on Friday, but the de minimis exemption ended for China back in May. In 2021, it was found that 60% of all of the de minimis exemptions came from China. I would argue from 2021 up until May of 2025, it probably got closer to like 70 or maybe even 75% of the de minimis exemptions coming from China. Think of Shein, think of Temu, think of the rise of the TikTok shop, okay? Probably like 75-ish% of all of the de minimis exemptions were coming from China. So at this point, is it going to make a difference if you get rid of the other 25% exemptions? Small products coming from South America or coming from Europe? No. You've already seen the brunt of that impact. But as I've mentioned in the prior video, we are in this seasonal weakness period. September is by far the worst month for stocks in the last 50 years, last 10 years, last 20 years. It's not a good month, okay? So any small news can be amplified to be a bigger problem than it really is. Now, today, Donald Trump says the trade deficit has been cut by half due to tariffs. Navarro says that tariff negotiations with China are ongoing. Now, in this seasonal weakness period, I don't really care about anything. As long as the economy does not all of a sudden go through some kind of large weakness and there's a larger growth scare, as long as the China negotiations and Europe negotiations continue to progress as they have been, like all the other crap, headlines, de minimis, blah, 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 they just don't matter. Now, during seasonal weakness, small news can seem like it matters a lot. De minimis exemption on Friday going away, which is really a nothing event, caused the NASDAQ to drop more than 1%. I think Friday should have been a green day. Should have been a green day based on the new GDP report that we got and the private domestic investment growth at 6.1%, up from 4.4% in the prior estimate. That is huge. It shows the economy is far from a growth issue or growth scare. Now, I do want to share this clip with you from CNBC. It says, "We're still in a bull market, but seasonal weakness wouldn't shock me."
It's Ryan Dietrich is Carson Group Chief Market Strategist. Sounds to me as, thank you for coming back. Much of the same story. This bull market rolls on.
Yeah, we think so, Scott. Thanks for having me back. Happy long weekend, everyone, and good luck if you're trying to win $1 billion in Powerball this weekend. Listen, overall, we're still bullish, yes, but I do want to talk about September for a second because I know lots of people are going to be pointing this stuff out. Since 1950, it is the worst month on average. The last 10 years, again, the worst month. The last 20 years, the worst month. And in a post-election year, it's like the third worst month. Now, one more thing to think about. I get it. August obviously was higher. This will be the first time August was higher with a second-term president going back to like World War II. But it is rare, Scott, to see August and September both higher in a post-election year. It's only happened 3 times going back to the last 18, 4-year cycles. So we're still in a bull market, yes, but I wouldn't be shocked if we had a little bit of kind of seasonal weakness, and we can get into kind of why. But I think it's possible after a 30% rally and a 4-month win streak here.
I know, but in all of that, including the wishing good luck for the Powerball and all that, I don't think I heard a reason as to why the market's going to continue to go up into the fall. Why September won't have a historical repeat.
Yeah, well, listen, I'm a big message of the markets person, right? Like, what's the market telling us? Well, if you look at kind of the leadership, I love it. What's even lagging, I even like more. Look at Staples. Staples relative to the S&P 500 is making like new lows right now. You want that area to lag. On the offensive side, you've got like high beta, some of those things doing very, very well. Obviously, consumer discretionary relative to Staples. So the message is still very solid. Now, one more thing. I know last week I didn't get to join you, but last week was a 90-90 day. Meaning 90% of the stocks, this is last Friday, 90% of the stocks on the New York Stock Exchange were higher and 90% of the volume. That is extremely rare. Going back to 1980, it's only happened 12 other times, Scott. A year later, S&P is up 11 times and up over 20% on average, even stronger returns in the near term. So if we have a little seasonal weakness after a 30% rally, I think it's going to be contained, say 4 to 6%. And there's still a lot of reasons the underlying pinnings that got us to this bull market are still healthy.
So you don't really buy the broadening, it sounds. I mean, beyond what we've already had from a big cap standpoint. If you want us to stay overweight industrials, financials, and technology, in other words, stay the course, don't overcomplicate it.
That's right. I know small caps had a heck of a rally. We get it. But, Amarosa and you just had a great discussion about kind of the PC. I'll take the other side of this. We're a little more concerned. Anastasia, sorry. We're taking the other side of this, though. If you look at like 178 components of core PCE, 45% of them are above 3%. What in the world does that mean? It was 40% at the start of the year. So we are seeing more of a broadening out on inflation. So what I'm getting at, the Fed's probably going to cut a couple times. We know that's coming. Maybe they don't cut the 6 times that are priced in over the next 16 months because inflation's a little higher. And what does that mean? Well, probably stick with who brought you to the dance, those large caps and, again, industrials, financials. And small caps are an area we have exposure, yes, but we're not overweight small and mid caps here.
Does the Fed cut in 2.5 weeks?
Yeah, we think so. We think so. And you had some other great discussions before I came on. I think the stage is set there because they kind of have to, I think, for lack of a better word. We're in the camp, I think I came on earlier this year, saying they should have been cutting back in the first quarter. Then they didn't. Then tariffs happened. But, there are some worrisome parts of inflation. But the reality is, yes, the labor market is obviously weakening, as everyone's been talking about. So it makes sense. We don't need 4.5% interest rates right here, Scott. We think, probably 2 more cuts this year, and then we'll see what happens next year.
Let me know your thoughts on all of this. Do you think the courts rolling back tariffs are going to be seen as a positive or negative for the markets? Honestly, you could make an argument for both ways. I do think it would be more likely than not a more positive thing than not, but you could definitely make the argument it could be negative as well. And from a general perspective, it could raise uncertainty, which in and of itself is not really a great thing. So yeah, ladies and gentlemen, that is going to do it for this video. I hope you guys are having the freaking best Labor Day weekend you have ever had in your entire life. And I hope you are ready to really get down to business in this upcoming week, because it is going to be absolutely incredible. Ladies and gentlemen, have a great rest of your day. Check out the link down below in the description of this video if you would like to come join us. I mean, give it a whirl, guys. See what we are doing. See what we are about, okay? You guys, I will see you in the next one.